if you have uncorrelated assets, and you easily can, because when the economic policies, when economic conditions shift, it shifts returns from one type of asset to another kind of asset. So when you have uncorrelated or low correlated assets, you can dramatically reduce your risk without reducing your return. So, I mean, just to give that as an example, the holy grail of investing, and you don't have to do it. It could be 5, it could be 10, it could be 15, but you will cut your risk in half, or if you get down to 10 or 15, you will cut it by 80% without reducing your returns.
American billionaire investor and fund hedge manager Ray Dalio founded the world's largest hedge fund in 1975 when he was just 25 years old. According to reports, he made his first investment when he was just a young boy caddying a golf course within walking distance of his childhood home in New York. There he met several Wall Street professionals and vowed a taste for investing. By the time he was in high school, his investment portfolio was worth several thousands of dollars. 40 years after he founded Bridgewater Associates in his apartment, the investment management firm became the world's largest hedge fund with over $140 billion in assets under management. Dalio is now a billionaire with a net worth of $22 billion. In 2020, Bloomberg named him the 79th richest person in the world. He has since moved up the list and is currently the 69th richest person in the world. When it comes to investing, Dalio has one golden rule, which is diversification. In fact, he says diversification is the holy grail of investing. Dalio credits much of his success to a unique method of portfolio construction, one that, unlike traditional diversification, reduces risk without impacting returns. The billionaire investor selects assets that have little or no correlation without impacting expected returns. 2 stocks that move at the same rate in time have 100% correlation. These are known as positively correlated stocks. Those that move in opposite directions when one increases in value, the other decreases, are known as negatively correlated stocks. Dalio chooses assets that have zero correlation, meaning an increase or decrease in value in one does not cause any effect on the other. The change in value in stocks and assets with zero correlation is influenced by entirely dissimilar variables. In a recent interview, Dalio shares some useful diversification tips that can help investors, especially during periods of economic downturns. Please watch, like, and share this video as the veteran investor shares some useful tips that can serve all categories of investors despite the ongoing decline. You can also share your comments and observations in the comment section below and subscribe for more videos like this. Let's get started.
It's more important to know how to diversify well than it is even know how to pick the best things. And one of the problems of the world is that everybody wants up. They want up in the stock market. They want up in the real estate market. They want up in the economy. And that and central banks can produce up, okay, by giving it this shot of money and credit. They can always produce that up. But that up over a period of time has a consequence. And that consequence is that there's a lot of debt. And that has to be paid back. That will be paid back in depreciated money. So you don't want to be in that position of, like, if your portfolio is going down a lot in this, that's not good. To give you an idea, if you lose half your money, it takes 100% return to get back. You lose 50%, you need 100% to get back. There are people who are in some of these tech funds and they're down 70%. This can't be part of the game plan. Okay, that's not part of the game plan. So the issue of being able to reduce risk through diversification, which doesn't reduce return, and in my view, never put yourself in a position that you could lose more than 25%. In like your worst case situation, 25% in a game plan, can be acceptable. But if you go into that, and if you look at any single asset in buying power, there's no single asset in buying power that hasn't lost 75 or 80%. So you need diversification.
In his interview, Dalio also gives some important suggestions that can help investors build a strong portfolio. building a strong investment portfolio should be the main financial goal of everyone who can afford to do so, especially as many economists are predicting massive layoffs before the end of the year. We can already see a significant portion of the layoffs, especially among tech firms. According to an analysis by the business data website Crunchbase, more than 32,000 U.S. tech workers have lost their jobs in 2022. Let's get back to Ray Dalio's interview as he shares some important insights about investing during a recession.
Be financially strong, have a good income and balance sheet, income statement and balance sheet. Think about how many months or years that you could live if you were if you didn't have an income. The more financial security you have, the more maneuverability you have, both to protect yourself on the downside and to take advantage of opportunities, and to know how to achieve a balanced portfolio. This is very important, I think, financially. And then be with people, your community, the source of happiness. Psychologists have studied that above a basic level income is not a source of happiness. Community is the highest ranked source of happiness. So how you work well with others. So I think meaningful work and meaningful relationships, to be productive and to also have the joy of those relationships, I think is of paramount importance. And then also to realize what the risks are. That's why I wrote them in the book. You know, the risks of can you, well, there are many kind of risks. And do you understand those risks? And where are you? And where do you live? What are those risks like? To recognize that the world is domestically and internationally breaking into different ideologies and different economic systems, really. That happens state by state as well as around the world. And to understand which are the places that are the best for you in those set of circumstances, to be aware of those risks. And that, then it's just the fundamentals, you know, raise your kids well and raise productive. I should say that in most of these cases, even the worst case situations, it's okay for most people. Okay. Yeah. So in most wars, most people don't die. Okay. Most people don't get injured. Okay. Most people don't. In most depressions, even most people don't get unemployed. Okay. They are scary situations. But it's not the end of the world for most people. It may be meaning cutbacks and so on, but you know, that's often good because you know, it's okay to, you don't want to get spoiled. You want to be self-sufficient, and you can get strong sometimes. So those are the things. So most people can get through these things fine. Just understand what it's like and, you know, navigate that well.
What do you think about Ray Dalio's interview and suggestions about the importance of diversification? You have a special strategy that has worked for you in this period of economic decline? Please drop them below. You just might be helping investors with less market experience. Also, remember to like this video, subscribe, and turn on post notifications so you've never missed any of our videos. Thanks for watching.